To invest or not to invest? That's the question on every investor's mind right now. We saw the same fear back in the COVID crash, and today the mood feels eerily similar. The fearmongers are back painting doomsday scenarios. With US markets falling sharply, many are expecting India to follow. But let's take a step back. This crisis won't affect every part of the economy equally. Some sectors will be severely impacted, others only marginally, and some barely at all. That means our investment strategy can't be one size fits all. We must be selective, thoughtful, and tactical. Because in this kind of market, knowing where to invest is more important than ever. On September 27th, the Sensex touched an all-time high of 85,978 points. Since then, it has corrected nearly 15%. And in just 1 week, 14 lakh crores of investor wealth has been wiped out. So what triggered this sudden correction? Rising global trade tensions, especially after the US announced broad-based tariffs. And that has reignited fears of a recession in the US. But it's not just about tariffs, volatility in global supply chains, and earnings slowdown here in India. And profit picking in overheated mid and small caps. So all of it has played a role. In fact, the US tariffs could backfire, causing stagflation, weak consumption, and delayed investments. But here's what's most often missed. India might be better positioned than most people think, and our trade surplus with the US is just around 1% of the GDP. So we are not as exposed as the headlines suggest. And this is not a secular bear market, and the recovery won't be secular either. This is a bottom-up stock pickers market where you focus more on individual businesses and less on macro noise. At ithoughtPMS, we have always believed in this approach. We don't offer one-size-fits-all model portfolios. So we customize your portfolio based on your entry point, because simply copy-pasting the same portfolio for every investor, regardless of the timing, is simply unfair. If you have been waiting to invest, this is a great time for you to enter through a PMS where a fund manager makes bottom-up decisions on your behalf. And we are very careful about valuations as well. So we don't deploy your capital all at once. Rather, we stagger our entries and only invest when valuations make sense. So even if you're worried about a further fall, we take care of the timing for you. And if you're already an investor with ithoughtPMS, you would have heard from us through cash calls. Because this is a market where smart action leads to outlier returns. So if you booked profits or made any portfolio changes, you can consider fresh investments now, because wealth creation depends on what you do in markets like this. This is your opportunity. If you would like to know more about how we can help you, just fill in the form in the description below and our team will reach out to you.